Okay, so basically, yeah, this is the strategy. So it's something I developed from combining one or two indicators and my prior knowledge of price action. So the first indicator is actually a trend following strategy. Like this is a move I caught between last night and yesterday and this morning. I also caught I think two similar moves. Okay, I caught actually four of this same setup yesterday. Between yesterday and today, I caught one between here and here, and then I still have this one that is currently running. This is where my target is. So I have this one that's currently running, and I have I think I have a buy position on Euro USD. I have a buy position here. The same thing on GBP and S&P 500. I also have a buy position here. That's my target. Even though this one is going to take longer, sharp, but I'm going to hold it because I'm convinced about this. So this one for GBP USD, I don't know how deep this retracement will come. I don't know how deep this retracement will come. Best case scenario, it stops here. Best case scenario, it stops inside this zone and pushes up. If not, I'll just take a loss here and then call it a day. But I'm convinced of these higher levels. These higher levels, those are price targets I'm looking at for the future. So let me open let me see GBP USD. Let me use another feed for this explanation. Okay, so first things first, the most important aspect of the strategies, the VWAP, volume. Let me go to indicators. Volume weighted average price. If you search VWAP, just search VWAP on TradingView indicators. The very first one, volume weighted average price. That's the first one, which is the one you see here. The blue line. The blue line, that's my volume weighted average price. And then these are the parameters I'm using. You can customize it to the way you want, but I personally choose to customize mine to the weekly. You understand? To anchor mine to the weekly, so that at the start of every new week, every new week, like here, this is a Sunday night. At the start of every new week, the view app is going to reset, and then it's going to, as price unfolds between Monday and Tuesday, the view app will set the trend for that week. So if price is above the view app, that means you'll be looking for buying opportunities. If price is below the view app, like here, you'll be looking for selling opportunities. But you not just buy yourself because it's above or below the view app. There are other confluences you need to check too. So this is the view app settings. You anchor it to the weekly, to the week. Some people anchor to session. Session is the same thing as day. Some people anchor it to the day, some month, some quarter, depending on your trading style. But since me, I'm a day trader, I choose to anchor it to the week. So that's at the start of the week, it's going to set my trend for me, and I know the direction I'm going to be taking setups in. And then you set the source to hope high low close 3. High low close 3. I don't really have an explanation for why I choose high low close 3, but it was a recommendation from one of the videos, one of those trading videos I watched one time on YouTube. So anchor to the high low close 3, let the offsets be 0, and then leave the bands to standard deviation, and that's all. Don't on any of this. And then let the time frame, my time frame was H4. I don't know why I changed to chart again. So let's time frame be H4, because that's my primary time frame for analysis. Most of my trades come from the H4. So let the time frame be H4, so that even if you say you want to go to the 15 minutes to look for an entry, you know that okay, the VWAP is still the VWAP you are seeing on the 15 minutes here. The VWAP you are seeing on the 15 minutes is still the same one you see on the H4. You understand? So that's why I anchored mine to the H4. Let me save that setting so that it's not going to go back to chart again, because save as default. And then that's the very first indicator for the strategy. The second one is the MA cross. We're actually using two moving averages. Since my trading view is the free version, I cannot use more than two indicators. That's why I'm using, it's actually supposed to be three indicators here, but it's two because I'm using two moving averages. So I have to look for an indicator that allows me to use two moving averages. So I'm using the MA cross. So if you just search for MA cross, you are going to see it. This one, it allows you use two moving averages. So the first moving average here, the one you see, this pink one, that's the 50 moving average, while the white one is the 10 moving average. So let me go to the settings. So you see the long one is the 50, which is the pink. The short one is the 10, which is the white one. So you can choose any color you want so that you can easily identify them. I just choose the pink and white because it's the color difference is drastic and I can know what I'm looking at. So the function of the 50 moving average is that's your major trend. You understand? That's your major trend. If you want to be buying, you want to be buying when price is above the 50 moving average. If you want to be selling, you want to be selling when price is below the 50 moving average. That's your major trend. Even if price is below the 50 moving average and you can still see buying opportunities, you understand? Like here, this is a bearish trend, this is a selling trend, and then we have this buy setup. You can still take a buy setup, but keep it at the back of your mind that the buy setup is going to be short term, it's not going to be long term unless you have a breakout like the one you have here. You understand? So as we had this breakout, we started a bullish trend. You understand? So you can still buy when price is below, but keep it at the back of your mind that it's going to be a short term buy, not a long term buy. So that's the function of the 50 moving average. That's your major trend. You understand? That's your major trend. You should not be buying when price is below and should not be selling when price is above. You understand? So that's your major trend. And then the 10 moving average, the white one, that's to help you identify short-term reversals. You can use it as confirmation entry, like as you've had price break here to the upside. You can, as long as price is still above the 10 moving average, you can still trend this trade. Like if you decide not to use a definite take profit, you can decide to trend this trade until when price closes below the 10 moving average. That's like a signal that this, okay, price is not even close below here, let's continue. You would have still trended this trade until this candle where price closed below the 10 moving average. That's your signal that okay, it's like a reversal is about to start. So you close your buys. You understand? That's the function of the 10 moving average. So if the way the strategy works, for you to take a buy setup, the first two things you should consider if you want to take a buy setup with this strategy, apart from your support and resistance, the first thing you should consider is number one is price above the 50 moving average. If you want to take a buy setup, the first thing you should consider is price above the 50 moving average. If price is above the 50 moving average, then the next thing you ask yourself is price above the VWAP. You understand? As long as these two are in place and then you have a proper risk reward ratio like 1 to 2, like me personally, I'm very okay with aiming for a 1 to 2. You understand? I don't have power for all those 10R, apart from unless I want to swing it like the one I showed you on S&P 500 and GBP card. Unless I want to swing it before I'll aim for a huge risk reward ratio. But if I'm not swinging it, I'm okay with my 2R, 3R, take what the market has to offer, and then wait for another setup. After all, there are a lot of pairs here I can trade. It's not that I'll just sit and be waiting for setup on one pair. All of these setups they have, they are different. All of these pairs they have their different setups they give from time to time, but still the same strategy. So if you want to take a buy setup here, like now we have this break, and then another thing is timing is important. You want to enter during the London or New York session, you understand? Because if it's the Asian session now, yes, there's still a probability that price will move in your favor, but the volume or the liquidity then will not be enough to give you the move as quickly as you want it to happen, you understand? So it's best to enter during the London or New York session where you know there's volume and there's liquidity. And then another thing you should consider when taking your setups is where is the next resistance or support. Like now we are on, I'm using this price action here, this price action for explanation of the strategy. So the thing is, if you are buying or selling, your take profit should be at the next current time frame or higher time frame support or resistance. What do I mean? Like we are on the H4, my analysis time frame is the H4. Since if I should zoom out, if I'm buying here, my next visible, I'll go to the line chart for this explanation because I like using the line chart to identify my support and resistance. So if let's say I'm buying this candle, I'm buying this bullish candle as it closes. Let's say I want to buy this candle now, and I want to use my stop loss to go here. This low is okay. That's like, another thing is with this strategy your RR won't be large like that, and sometimes you might use large stop loss, but it is still in your favor because you know that on the long term price is going in your direction, you understand? So you won't, it's not every time you are going to be having small stop losses, you understand? The strategy is going to give you a good stop loss that will be able to accommodate like all those minor price fluctuations, you understand? So that at the end of the day you still earned your trade net profit, you get? So but sometimes, like, apart from, it's just because this candle is a large candle, sometimes you might, let's say something like this, because this is a retracement, this is a breakout, you can use this candle for your stop loss and then just look for your 1 to 2. So you see now here the stop loss is lesser. So the thing is, just allow the market to define your stop loss, you understand? I see plenty of traders, they want to be having small stop loss, tight stop losses, so that they have a huge risk reward. At the end of the day, it's going to affect your win rate, and your win rate is also going to affect your psychology. You start thinking like, what's wrong with me? Is it that I don't know what I'm doing? But you know what you are doing, but the thing is you're actually looking for tight stop loss. That's why you are not getting that high win rate you're supposed to have. So me personally, I like allowing the market define my stop loss. So back to this example, let's say I'm taking this candle, I'm taking this candle, I'm taking a buy here, because this buy satisfies all of the criteria we are supposed to look for a buy setup. So now, because as you can see, price has broken to the upside, it is above the 50 moving average, it's above the VWAP, it is also above the 10 moving average. So this is a nice buy setup here that the strategy has given us. You can also go to the lower time frame like the H1 to actually refine this setup, you understand? The thing is, if you go to the lower time frame like the H1 now, it's going to help you. The advantage is that it's going to help you like reduce your stop loss, let's say like here, or you can decide to just put it below the 50 moving average, you understand? You can just decide to put it below the 50 moving average. See, that has like help us cut our stop loss by almost half, you understand? But I don't recommend going below the H1. Like if you can see, these are like all my favorite time frames, the 4 hour, daily, weekly, monthly, and the H1. Did I add 15 minutes? Okay, the 15 minutes is just there because now only know waiting keep on for the down concern. So I actually like basing my trades on higher time frames, you understand, because it gives me that leverage. Let's go back to the H4. It gives me that leverage, like I can actually just trust the market to do what it's going to do. So going back to the setup I was talking about, so let's take this buy setup, and then for a TP level, like I said, if you don't want to trend the market, like if you want to trend the market, remember what I told you about trending the market, you trend till price closes below the 10 moving average. So if you don't want to trend the market, you can zoom out and look for the nearest closest level of resistance or support for your take profits level. So for this setup, let's say our next resistance will be that's too small, so let's use this level. We could use this level just for this example. We could use this level, and if you feel like okay, this level is not enough, you could actually, what I actually like doing is I like going to the daily time frame to look for my next level of resistance or support, because the daily time frame resistance and supports are always strong. That's one thing. And then I don't use these ones inside. I don't know if you understand me. I don't use these ones inside. I use the ones that are outside, like outside. What I mean is I don't care what's happening inside here. You understand? It's these ones I'm seeing. These ones I'm seeing here, 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 that I actually care about. You understand? I don't care what's going on inside here. The same thing if I'm selling now. If I'm selling and I want to look for a level of resistance or support, it is these ones that are outside. I don't have time to go inside. If not, I'll be plotting levels everywhere on the chart. So it's this one that are outside here. Let me this one that are outside here that I'll be looking at. This level, let me go to the line chart. This level, you understand? That's for selling. So since we are buying now, what I'm actually looking at, the levels I'm looking at, this is the daily time frame. Since I'm buying, the levels I'm looking for TPR, let's average this level, because you have 1 touch, 2 touch, 3 touch here. So let's just take the average. Let's use this one, or you can let's use this one. So you see price came here, reacted, and then the same thing here. This sale started from here, so let's use that level, and then we can go higher. Now I'm bringing this level into consideration, and then there. So basically here, since we are taking this buy setup from the H4, we can actually go 1 time frame higher to look for a take profit level. That is actually going to give us a larger risk reward. You understand? It's going to give us a larger risk reward. So now, instead of us just leaving our trade at 2R, or if you don't want to trade, you can see going to the daily time frame is actually giving us 3.3R. And then back on the H4, if price does not actually close below the 10 moving average, you can still decide to trend this trade up to your next daily level of resistance. That's actually a 5.4R. So that's how you could actually like maximize. So that's why I have this setup on US 500, and I'm aiming for this level. Another thing I used to consider, see where this downtrend started from. Let me mark that level. See where this downtrend started from. Here, most especially where you had the moving average break. Why I'm actually using that level as TP is because that is where we had a moving average break. You understand? And I don't know if you've learned about psychological levels. Psychological levels are like the 25s, the 50s, the 10s, because that's where the hundreds, that's where these hedge funds normally close, like normally take their positions, you understand? Because those are like round figures, like 25, 50. So I'm using 6,100 because that's where we had that break to the downside. So I'm using the apex of this 50 moving average as my take profit. So that's why I said I want to swing this trade. You understand? I want to swing this S&P 500 because we've been in this downtrend, and then here, this area, we've broken the trend now to the upside. So I took a position there this morning. So I want to swing this S&P 500 to that 6,000 level. I think it's the same thing I'm looking at on CAD something similar here. So I took a trade. This I'm on break even on this trade. This is where my stop loss currently is, and then I'm in net profit. So I want to swing this to this. I'm actually looking at 7,500, between 7,500 and 1,7,500 and 1 is that's what I'm looking at for CAD. So we had a break here, and then I want to swing this one. Now I want to swing it to the upside. So that's okay. So I've explained how to use its strategy if you want to take trades in the direction of the major trend. So now let me explain how to take trades in it, like against this trend. Let me explain how to take trade against this trend. This anti-trend trade I want to show you, it's not every time you see it, and it's not going to work every time. Like last week I had a setup like that on USD CHF. It was anti-trend. I think this is where the setup started, and then I was aiming for this high, but unfortunately price didn't get to that place. Price actually stopped at this level of support that became resistance. That's where price stopped, and then continued pro trend, but I was actually aiming for this level. I actually ended the trade in break even. So let me explain. Let me look for a classic example of that anti-trend trade. So I think I had one on CAD. Was it 1 week ago? There was one on Euro USD. Let me check Euro USD. I think I had one here, but okay, it's here. But I didn't take this one because I had other positions. I'll send you a screenshot. Let me show you one I took. There's one I took. You won't see this setup every time, but when you see it, I think it plays out on average 70% of the time. I took one on gold, so I'll send you the screenshot after this video. So let me look for that one I took on gold. I think it was this. I think it was this one. So this was my target. So how do you take an anti-trend trade? An anti-trend trade is when price is moving against the major trend. What's the major trend here? The major trend is the 50 moving average. You understand? So what happens is the VWAP will be moving in opposite direction as the 50 moving average. So in this case, the VWAP is trending up, the 50 moving average is trending down. So what happens is depending on where depending on where the 10 moving average is, so for this trade to actually qualify for an anti-trend trade, the VWAP and the 10 moving average should be facing the same direction. You get me? Note here the major trend here is bearish because price is below the 50 moving average, but here the VWAP is trending in opposite direction as a 50 moving average. So now for this trade now to qualify as an anti-trend trade, price, the VWAP and the 10 moving average need to be moving in the same direction, and price need to break the VWAP and the 50 moving average in that direction. So here what you see here is the 50 moving average is selling, the VWAP is buying, the 10 moving average is buying. We won't just buy because they are buying, you understand? Even though we had early signals from the break of the open of this candle. We had early signals here already, but to be on the safe side, we have to wait for price to break these two to the upside. So where did you have that break? We had that break with the close of this candle. This is where we had that break. So this is your signal here to buy. You buy, and then where's your next take profits level? I use this level because the risk reward, it's supposed to be here normally, but I wasn't feeling this, like I wasn't feeling this price. So I was looking for a price that is close to where the 50 moving average is, so I had to use this resistance level. That's why it's resistance level. So because price will actually trend to the moving average. When you see a trade like this, just keep it at the back of your mind that price will actually trend to the moving average. So I was looking for a level that's close to where the moving average is, so that's why I use this resistance level here. So I took this gold buy. I took the buy. I think I held it for 2 days. I had to hold it for 2 days. I'll send the setup to you. I still have it on my phone. So my stop loss was below this candle, and then this was my take profits level. This resistance level was my take profits level. So I netted 3.37R on this setup. So this is an anti-trend trade, and the ones I explained earlier, like here, take a buy here, this is a pro trend trade. I actually missed this setup. I was upset. I was upset with myself because this setup was just waiting for me to buy. I had it at the back of my mind that gold was going to 3K. I had it because there are some analysts I follow on Twitter, two at Pepperstone, and the other one trades for a hedge fund on Wall Street. So I just turned on my Twitter notification for those three guys. So they used to drop analysis, just like fundamental analysis, general market sentiment. So I had it at the back of my mind that gold was going to 3K. So then we hadn't had this push to the upside. Price was still here. It was just there waiting for me to buy it, but I was reluctant. I don't know why I was reluctant. Maybe because of this. I was just reluctant, and then the next day we had this push to the upside. That's how I missed this 2.8 RR there. I just missed it. I was upset because last week in the loss, but this week I was reckless last week. That's why I ended in the loss. Not like it was strategy or anything. I was just reckless that last week. But this week I am scaling back my profit. So I've already had like 4 winning trades between yesterday and today. I think 3 or 4 winning trades, and then I'm still holding some positions on S&P 500. I'm holding position on Euro USD, on GBP USD, and on CAD JPY. So I missed this setup, and then that's another disadvantage of having many setups on your watch list, because you won't be able to take all. There are some days I'll have exposure of like 2.5% on the market, so I won't be able to take all. So you just have to select. Like from yesterday, I had it at the back of my mind that I'm going to short Japanese yen because GBP, JPY, Euro JPY, SND JPY, CAD JPY, they were all facing the same direction. So I just had it at the back of my mind that I'm going to short Japanese yen. So I had to just take buys on the 4 of them, and then I've closed 3. It's only CAD JPY that is still open because I want to swing it to that level. So, and then I still had buy setups on Euro USD and GBP USD. I think it was this buy setup, but I didn't take it because I already had exposure to Japanese yen, so I just had to allow the GBP USD and Euro USD pass me because I've taken a buy here this morning, so hopefully this one gets to take profit. So that's just it. You won't be able to take all the setup. Just select. You can select, like, let's say you have a buyers on US dollar and Japanese yen. You can just take like 2 here, take 1 here, or you take 2 here, you take 1 here. Just ration it. But yesterday I just went all in on Japanese yen, on selling Japanese yen. So, and I came out net profitable. So basically that's what the strategy is first of all, your 50 moving average is your major trend. The VWAP will give you the trend for that week. The trend for that week. So if you are buying above the VWAP. If you are selling below the VWAP. But it's not advisable to sell below the VWAP if the 10 moving average is not also facing that direction, and then you have a clear take profit level around where the 50 moving average is. So for starters, for beginners, it's best to just stick to the pro trend trades where everything aligns in the same direction, and then you take it. If you have the VWAP and the 50 moving average facing the same direction, you can just take your trade. The 10 moving average is just there for you to spot early signs of reversal. But if you have the 50 moving average and the 10 moving average facing the same direction, and price has closed like here, this is where I was supposed to take the buy yesterday, but I didn't take it. This candle, you see that here price has closed above the VWAP in the direction, like in the major trend, in the direction of the major trend, which is the 50 moving average. So price has closed. I was supposed to take the buys here and targets this size, but I didn't take that one shot. So, but where price closes it's very important. Since I'm on the H4, I have to check like every 4 hours to see what the current candle has closed, where the current candle has closed, if that's closed bullish, if that's closed bearish, and then that will give me a confidence if I should continue holding my trade or if I should close. You understand? Like here, since price has closed above the VWAP, and then this is the last H4 candle, so I took a buy at the close of this thing, stop loss below the candle, and then I'm aiming for this daily level for my take profits target. So for beginners, just stick to the pro trend. Maybe as you advance into the strategy, you can start taking reversal setups. You understand? But for now, it's advisable just stick to the pro trend. So that's everything you need to know about the strategy. I just hope I did my best in explaining it to you, Sha. But if you have any questions, if you have anything you don't understand, I'll still try to make clarifications where I can. So thank you and God bless.